Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as we begin the trade for this week on Monday, the follow-up uptick is absolutely visible in terms of strength and contribution coming from across the sectors. This is by and large a follow-up of what we saw last week on Thursday and Friday. We saw markets recovered and closed in green. Ignoring that intraday volatility that I have been speaking about for quite some time, and it was only prudent to expect some amount of stability to coming. Not that we open up in the first part, maybe 500, 600 point on the upside, and by the time we approach the second half of the trade, all those gains are wiped out, and we are down deep in the red with equal amount of loss. So given the fact that we've recovered last week on Thursday, Friday, this morning again, as I speak to you, just to give you certain levels, 56,000 plus is the level of Sensex, trading up about 1130 odd points. That is the Sensex. Nifty is trading about 16,700, up about 330 odd points. And the Nifty Bank trading about 36,000, up 400 odd points. So, the recovery that we've seen for this Monday as well as last week, Thursday and Friday, if you put in terms of the points addition, totaling up, then possibly, this late afternoon, by the time we wind up the trade, or maybe tomorrow, you could see markets giving up a little bit of gain, given that we have recovered. So it's always prudent to have that kind of adjustment in the market. It brings in more stability and strength. This is what my feeling is. So don't be surprised, but let's hope that the volatility that we saw reduces and there is some stability. And the reason why I say that, friends, is because we've seen close to about 15% plus approximately correction on the large cap indices, that is Sensex and Nifty, from the highs to the lows that we were very recently, and so forth. For the sectorial indices, stock specific, we've seen deeper cuts compared to what correction we saw in the large cap Sensex and Nifty. But overall, friends, my sense is that the positivity in terms of and all the correction that we saw, my understanding is more of a correction that was reflected in our markets because of the global news flow. Nothing adverse in terms of our markets. In fact, other than inflation bumping up and a little bit of uptick in terms of interest rates going up, coming month June, we are likely to see the credit policy come through, wherein the RBI governor has also mentioned about possibility of a rate hike, and not to forget, it was expected. So expect some amount of uptick in the interest rates in the credit policy. Of course, it all depends upon where the inflation is by the time we approach the credit policy, and then we'll have to take it. On the other aspects, rupee dollar, well, we did see weakness approaching close to $78 to a rupee. But now, as I speak to you, there is some strength. 77.51 is the level of rupee against the dollar, with some strength coming back. But the problem point is once again the boil in the crude oil prices. $120 a barrel for Brent, $116 a barrel per NYMEX. And this is largely because of the European Commission planning to put a total ban on Russian oil and gas. Remains to be seen what happens to the economy, but it's not that there is an immediate alternative available to supplement any kind of import ban or restriction as far as whatever Russian oil and gas goes into the European nation. So one remains to be seen. But overall, good to see the strength. We are virtually approaching the curtains down for the fourth quarter, and as a sum it up, I think the fourth quarter has been a better shade. The worry, if any, has to be for this financial year, first and second quarter, because the rise in crude oil prices is going to affect the manufacturing side more, given that in the virtually fag end of March, we saw crude oil prices boiling, and the impact of the entire uptick in crude oil may be felt in the first and second quarter. So manufacturing side could be something which will have to deal with a little bit of contraction, depending upon what sector and what goods one manufacture. Thank you very much for your patience hearing. I'll see you again next week. But like I have been mentioning, banking, autos, and remember, autos came out with a fantastic set of number. M&M was a great delivery. So try to pick the winners and have patience. I'm sure good news on monsoon front and an optimism in terms of positive macro data from the local front would help our markets. Thank you, and I'll see you again next week. Bye bye.